Hello there, welcome back to my channel. My name is Korianne. Today we have got a game-changing topics, how to cut your income taxes by staggering 50%. So stick around because we are diving into a proven strategy that will revolutionize the way you approach taxes. You won't want to miss a minute of this. The key is not just how much you may earn, but how much you can retain after your working years. So if you are new to our channel, be sure to click the subscribe button to stay updated on our upcoming content. Additionally, for those of you who haven't subscribed yet, I kindly ask for your support to helping this channel double its growth by the end of this year. Your subscriptions means a lot. But before we unravel the secrets, let me share a surprising revelation. What if I told you that reducing your tax bill by half is not just a possibility, but an achievable reality? That's right. I have got a strategy that I have been proven to work, and by the end of this video, you will be aimed with a tool to cut your income tax like a pro. I need to make a disclaimer though. I am not a licensed CPA or tax accountant. All the information I am about to share in this video is based on my personal experience, and I have consulted with our specialized CPA for our specific needs. The first key is understanding the tax game. Knowing the rules giving to you is the power to play it strategically. We will break down the tax saving strategies and show you where to find those hidden gems that can lead to massive savings. The strategy number one is the power of tax advantage accounts. For instance, consider contributing the maximum allowance amount to your 401k or individual retirement account, IRA, or health saving account, HSA. By doing so, you not only secure your financial future, but also reduce your taxable income for the current year. This strategy allows you to benefit from the tax deferred growth, while intermediately enjoying the lower tax liability. You have the option to contribute up to $22,500 for the year of 2023. IRA limit increased to $6,500. Health saving plan, you can put maximum limit of $3,850 for a single filer. For family, you can put a maximum limit of $7,750. The maximum limits may be higher in 2024, so you can do research to find out or talk to your accountant. If your income is $100,000 without contribution to this account, 401k, IRA account, or HSA, your tax rate would be at 24%. However, by investing the maximum limit allowed into this 401k, IRA account, and HSA account, your tax rate can decrease to 12%. That's a half saving. And strategy number two is business expenses and deductions. If you are the business owner, get ready for a deep dive into deductions, business expenses. Properly navigating this landscape can result in substantial deductions in your taxable income. Are you ready for these 10 common deductions when owning the business? Number one is office supplies and equipment. Costs associated with necessary office supplies, stationery, and equipment such as computers, printers, and furniture. Second is travel expenses. Deduction for business-related travel, including transportations, accommodations, meals, and other associated costs. Marketing and advertising. Expenditure on promoting the business covering advertising costs, website maintenance, and marketing materials. Professional services. Fees are paid for external professional services such as accounting, consultations, consulting, or legal advice from attorney. Utilities. Expenses related to essential utility used for business operations such as electricity, water, internet, and phone services. Rent or lease payments. monthly payment for office space, equipment, vehicles leased or rented for business purposes, insurance premiums, costs associated with business insurance covering liability, properties, or other necessary forms of coverage, employee wages and benefits, salaries, wages, and benefits from employees, including health insurance and retirement contributions, home offices expenses. If you have a portion of your house using as your business, then you can deductions for expenses related to the home office, such as portions of rent or the mortgage payment like utility and maintenance costs, business meals and entertainment, deductions for meals and entertainment expenses directly related to business activities with and conducted with clients or business associates. So if you own a business with an annual revenue of $100,000 and the total expense come out to be about $60,000, you will only tax on the remaining income of $40,000 at the 12% tax rate. So having observed these deductions, some of you may feel inspired to kickstart a business, don't you? A significant distinction come into view when you are a business owner. You have the advantage of deduction many of these expenses before paying taxes. In contrast, a W-2 earner, you are required to pay taxes upfront before considering any deductions. And strategy number 3 is real estate and investments. Real estate and investment are not just about building wealth, they are about optimizing your taxes too. We will explore tax-efficient investments and ways to leverage real estate for significant tax benefits. Depreciation is the biggest tax incentive when you own income-producing real estate projects. Consider you possess a real estate portfolio value at $1 million. Of this, 20% is attributed to land cost, which is non-deductible. However, you can claim deductions on the remaining 80% associated with the structural buildings. For residential projects, you have the opportunity to deduct $800,000 over 27.5 years through a straight line depreciation. By using the math, divide $800,000 by 27.5 years, and you can claim an annual depreciation of $29,090 as long as you retain ownership of this project. If you qualify as a real estate professional, you have the potential to deduct this entire amount from your other income. For instance, if your income is $100,000 per year without factoring a real estate depreciation, your tax liability would come out to be $16,295. Conversely, for owner of $1 million in real estate assets, a deduction of $29,090 from your income is possible provided you qualify as a real estate professional. This would result in a deduct tax payment down to $96.29, yielding a saving of $66 annually. The remarkable aspect is that you have the opportunity to invest this sum into the S&P 500 index annually, earning a 9% rate of return. After 30 years, this account is projected to grow to $900,088. This strategy is tried, tested, and proven to work. I encourage you to consult with your CPA or tax accountant to strategically plan for these deductions, potentially reduce your tax bill by 30 to 50% each year. Then you can have extra saving to invest in assets. Now, I would love to hear from you. What steps have you taken to minimize your taxes? Any insight or tips you would like to share? Feel free to drop your thought in the comment below. Let's keep this conversation going. If you find this video valuable, don't forget to like, subscribe, and hit the notification bell. And please share its content with other people who can benefit it as well. Until next time, let's maximize those savings. Ciao!